Hello again. The question, how much should I allocate in one single provider? This seems like a very, very easy question, but in copy trading, the money allocation doesn't always work as expected. My name is Paulina from Brokeree Solutions. We are here again with Abed. And in this episode, we are going to cover funds allocation and exposure.
Thanks, Paulina. Before we jump in, a quick reminder for anyone discovering us for the first time. Brokeree Solutions is a technology provider for brokers. We do not provide trading services to individuals. This content is shared for educational purposes only. If you didn't watch the previous episodes, this is your cue to watch episode 1 and 2. You'll find many interesting information for you, and these questions are the most asked questions from traders. So please,
Yes, we highly advise to watch the previous episodes because it's all connected, right?
Yes.
Let's say I'm following multiple signal providers. Should I limit my exposure for each signal provider?
Again, we go back to the same way of answering. There is the logical and the technical. Okay, from the technical side, you can connect on social trading, multiple trading accounts. So you can also allocate each account to follow a signal provider. So you can set each account with different capital, with different exposure to one or two providers to have different kind of, again, it's a part of also risk management here, because I would like to, for example, deposit $100 in that account, and I'm only willing to like expose $100 to this provider. And again, we go back to risk management. So from the technical side, it is. From the logical side, it makes more sense actually to separate, to put different balance, different amounts in different accounts. So you have, because it depends on the instruments that are used by the provider. Some provider is using gold, for example, is trading gold mostly. So you'd need more capital for the gold and for the contract size. So it makes more sense not to mix and match.
Okay. And the same case scenario, I follow multiple signal providers. What percentage I should allocate with each signal provider?
This is a very much opinions-based question. But again, if you remember from our last episode, the red flags. Should be always aware
red flags
of the red flags. So if you have been following the provider for a while, you've observed, you've put him on them on a watch list, you've observed, and then you start with a lower percentage, and then you increase the percentage. The more you see that they're stable, they're consistent, they're not spiking, no much drawdowns. So with getting to know the provider, this feels a lot like we're talking about dating. With getting to know
I'm 100%
the person,
it's the same. Exactly the same.
So you put your list, you start eliminating. Once you trust the provider, you can
give your heart
more
to this trading.
Give your heart to this provider. Yes.
Okay, and I want to ask you a question that, again, it's very much connected with the first and the second episode that we did. Can I still copy the signal provider if my balance is smaller than the provider's balance?
Okay, again, we've answered partially this from a different perspective in a previous episode, but the copy trading, the social trading software itself only sends the execution to your trading platform. So if your margin, if your capital, if your equity allows you to open the trade, you will be able to open the trade. How to control that, though, is through the subscription strategy. When you choose the subscription strategy, the right one, the correct one, and you choose lower volume open than the provider, this is when you make sure that you'd copy the most possible trades, especially that. And I would suggest using the auto scale in this case, because the provider in this case, if they have, for example, $10,000 and you have $1,000 in your account, the provider opens one lot, the system will calculate the difference in balance and will open 0.1. So that would make you open the same with him, with the same provider.
At the same price,
at the same price, at different percentages, different volumes, according to the difference in balance you have.
Great. That's really
but
amazing.
It also works vice versa. So if you have more money than the provider, it could open larger. So this is when you go to the correction and you set the maximum amount you'd like to set.
So again, everything about the configuration, as always. Smart configuration. With the copy trading platform that gives the options of a lot of configuration. We are talking about risk today, of course. And the biggest risk is what? Losing a lot of funds, right?
Of course.
How can I set up the stop loss to protect me from catastrophic losses that nobody wants to go through?
Okay, so we go back again. Risk management. Subscription strategy.
Exactly.
Let's imagine those two as a scale, as a way to balance. You start with your subscription strategy and you complete it with your risk management. When you start with a new provider that you still don't trust, you're still observing in the dating phase. Let's call it the dating phase of a provider. When you start with the dating phase of a provider, we're uptight. We're still not sure. We're careful.
Putting a lot of limits.
Exactly. Limits. Putting a lot of limits. No hidden messages here.
But I'm very happy that, as you say, there is, for anyone who really wants to start copy trading, there is a lot of option to feel very safe.
Exactly.
Yeah.
So that's how you protect yourself. Yes. You set the right subscription strategy that would make you open less volumes or like a fixed volume count, and then you set up your risk management. You put your threshold, and once the threshold is reached, the actions will be taken accordingly, and it would stop your losses. So that's the best way to protect yourself and your funds.
Okay. As you said before, we have a different copying strategy, right? How the choice of a copying strategy affects the allocation and an exposure per trade?
It does. So we can go with this step by step. We have 4 subscription strategies. We have the auto scale. So it chooses the volume according to the difference in balance or equity. That's also, you can choose that as a trader, set according to the difference, and you can choose the ratio multiplier. So as an example, as mentioned, if the provider has $10,000, you have $1,000, they opened one lot, you'll open 0.1. It works vice versa. It works also the other way around. If you have more money than the provider, you will end up opening. Fixed, very simple. It's just fixed. You set the amount. Multiplier, larger than 1 in the multiplier ratio. It will open greater. It will multiply by the amount that you set. Fewer, less than 1, it will open less volume. So in that case, this is how you limit your exposure. So it depends on which one suits you the best. On the subscription strategy, each one of them is explained, it's written, it's very easy and simple. Again, in the past episodes, it's been mentioned a few times, the user interface is very user-friendly. Actually, it gives you there are a few messages that are sat there that cannot be edited. It's basically for those subscription strategies, you can choose the one that suits you the best and proceed with it.
Yes. So we can, I think, finish this episode by saying very important again: configuration.
Configuration. Risk management. Avoid red flags.
Yes.
Avoid red flags, and risk management again.
Yes. And limitations.
Yes.
Thank you so much for this
Thank you so much.
episode.
Thank you, Paulina.
So that's a wrap for the third episode of our Traders Education series. Of course, we were discussing exposure and limits. We, as always, hope that you enjoyed. If you have any more questions, please don't hesitate to put the comments so we can answer them. And in our next and last episode of a series, we will be discussing the fees and costs connected to the structure to the copy trading. Thank you so much.
Thank you.